Elon Musk reveals that Chinese economy has collapsed. According to Musk, soon a lot of bad things will happen because the Chinese economy has collapsed and people should know what is really going on in China. Once the most exciting economy in the world has become a catastrophe and seems like China has completely collapsed. This is a crazy story development, so let's explain how Elon Musk reveals that Chinese economy has collapsed. So, for many years, China's gross domestic product remained a focal point in global economic discussions, reflecting its rapid growth and increasing influence. China's economy, second only to the United States, had continued to expand, though its growth rate had moderated compared to its explosive rise in the early 21st century. The United States, with its diverse and technologically advanced economy, still maintained the world's largest GDP, a position it has held for over a century. The gap between the US and China, while significant, had been narrowing, illustrating China's growing economic prowess. The third largest economy, traditionally Japan or occasionally the European Union, if considered as a single entity, lagged behind these two giants. However, everything is about to change because Chinese economy has collapsed. For example, Elon Musk, who has a lot of business operations in China with various Tesla factories, has expressed his concerns about what is going on in the country right now. He also has acknowledged potential risks to the Chinese economy, such as over-reliance on debt and real estate bubbles. He has cautioned against overly optimistic projections and the need for sustainable economic development. Also, Musk has also been critical of the Chinese government's political system, including its human rights record and lack of freedom of speech. But is the situation this bad? Well, there are a few reasons why Chinese economy has collapsed. And the first reason why Chinese economy has collapsed is the Chinese real estate crisis, which began to unfold in earnest around 2020 and has been a significant destabilizing factor for the country's economy. This crisis was precipitated by a combination of factors, including excessive borrowing by property developers, speculative investment, and a regulatory environment that initially encouraged rapid expansion, but later sought to rein it in. Major real estate companies like Evergrande found themselves mired in debt, unable to complete projects or repay loans. The crisis was exacerbated by the government's three red lines policy, implemented to curb the sector's high leverage, which inadvertently led to liquidity issues for many developers. The ramifications of this crisis have been profound and far-reaching. On a macroeconomic level, the slowdown in the real estate sector has contributed to a broader economic cooling in China, affecting related industries like construction, materials, and home furnishings. This, in turn, has had ripple effects on the global economy, particularly in countries and industries that are heavily invested in or dependent on Chinese economic growth. For the Chinese populace, the crisis has eroded what was once considered a safe and lucrative investment, leading to public discontent and protests, especially among those who had prepaid for homes in developments that were halted. Also, the reason why Chinese economy has collapsed is that the national debt within the Chinese economy had become a significant concern for both domestic policymakers and international observers. This debt accumulation was largely driven by years of rapid credit expansion, a real estate boom, and substantial local government borrowing, often through off-balance sheet vehicles. The corporate sector, particularly state-owned enterprises, also contributed significantly to this debt surge. This rapid increase in leverage was initially seen as a means to fuel growth, especially in the aftermath of the 2008 global financial crisis. However, over time, the quality of this debt came into question, with investments often channeling into less productive and more speculative areas, notably in real estate. The real estate sector, which accounts for a substantial portion of the Chinese economy, began showing signs of strain, with high-profile defaults and liquidity crises in major property developers. The consequences of this mounting debt were multifaceted and posed considerable risks to both the Chinese economy and the global financial system. Domestically, the high debt levels limited the government's policy options, making it more challenging to stimulate the economy without exacerbating debt vulnerabilities. This situation was particularly delicate, given the need to balance economic growth with financial stability. Externally, the size of China's economy and its integration into global financial markets meant that any significant debt crisis could have far-reaching implications, potentially triggering global market volatility and impacting international trade and investment flows. Furthermore, the reason why Chinese economy has collapsed is that the Chinese economy is now grappling with significant labor market challenges. One of the most pressing issues is the demographic shift resulting from its aging population. a consequence of the decades-long one-child policy and increasing life expectancy. This demographic change is leading to a shrinking workforce, with fewer young people entering the labor market. This trend is compounded by a growing demand for higher-skilled workers, driven by China's shift from a manufacturing-based economy to one focused more on services and technology. The mismatch between the skills demanded by the evolving economy and those offered by the workforce is creating a gap, leading to both a shortage of skilled labor in certain sectors and underemployment in others. The ramifications of these labor market problems are multifaceted and significant for the Chinese economy. Firstly, the shrinking and aging workforce contributes to a slowdown in economic growth, as labor shortages can lead to increased wages, thereby raising production costs and reducing the competitiveness of Chinese goods in the global market. This situation is particularly challenging for industries that have traditionally relied on low-cost labor. Additionally, the skill mismatch hampers China's ambition to move up the value chain and become a leader in high-tech and service industries. It also exacerbates income inequality, as those with skills in demand enjoy higher wages and better job opportunities, while others face stagnation or unemployment. These labor market challenges, if not effectively addressed, could lead to social and economic strains, impacting China's long-term economic stability and its role in the global economy. And that's it for today. Subscribe to our channel and hit the notification bell